What's going on, traders, and welcome back to another video. Today we're diving deep into the world of candlesticks, language of price action, and crucial concepts like support and resistance, and a special little candle called the Doji. By the end of this video, you'll be able to look at the charts with a lot more confidence. So grab a notebook, hit that like button, subscribe if you haven't. Let's get started. All right, first things first, what is a candlestick? Simply put, each candlestick tells you a story about what happened to the price of an asset over a specified period of time. That period could be 1 minute, 1 hour, 1 day. It all depends on what time frame you're looking at on your chart. You mainly see two colors on your trading chart. Green for bullish, red for bearish. A green or bullish candle means that price closed higher than it opened. So the bottom of the candle is going to be the open and the top of the candle is going to be the close. For a bearish candle, it's the opposite. That means that price closed lower than where it opened. So the top of the candle is going to be the open and the bottom of the candle is going to be the close. Now these lines that you see here sticking out of the top and the bottom of the candles, these are called wicks, or some people like to call them shadows. Wicks represent the high and the low of that time period. So the very top of the wick will be the highest point that price reached during that time period, and the bottom of the wick, the very bottom of the wick, will represent the lowest point that price reached during that time period. Candlesticks are the foundation of price action trading. Price action is simply how price moves, and understanding it helps us anticipate future movements. One of the most powerful price action concepts is support and resistance. Think of support as the floor. It's a level where buyers tend to step in and prevent price from falling further. Price might bounce off this floor multiple times, but ultimately the support is where you would look for price to be respected. And ideally, in a downtrend, you'd be looking for price to come, touch this area, and then respect it and continue up, right? Resistance Think of resistance as the ceiling. So it's a price level where sellers tend to step in and take control and stop price from going higher. Price might also hit this ceiling multiple times before turning around and come back down. So ideally, when you see price coming up here, you want to see price respect your resistance and then do the same thing, right? So if we were to look at these in candlesticks, that's how you would want to see price come down and touch support. And then vice versa for resistance. How do we find these levels? Look for areas where price has reached multiple times. The more touches, the stronger the level. Wicks are super important here. They show us where price tried to go, but couldn't. Sometimes price gets stuck in between support and resistance levels, moving sideways. This is called consolidation or a range. Eventually, price will either break out above this resistance area or break down below the support area. A strong candle body closing above or below one of these areas is a key signal. I personally like to wait for a candle to close a strong candle closure above with a wick or some sort of retest to continue in my direction, or a strong candle closure beneath with a wick for a retest and then a continuation. So what I mean by that is, let's say if we're on a resistance, we would want to see a strong bullish candle close, right? And then I personally like to see maybe a retest here before we start to push up in that direction. And I would normally take my entry somewhere in this wick or just as this candle is crossing the high of that previous candle. And then for support, it will be the same, but just obviously the opposite. We want to see a strong bearish candle closure here, right? And then I'd like to see a retest with another strong bearish candle pushing down. And again, in this scenario, my entry would typically be either somewhere in this wick, or as price started to break beneath this candle closure here, then I would enter for my shorts. Now let's talk about a special candle, the Doji. A Doji forms when the open and close price of a candle are very close or the same. See how the body is so small or just a thin line? This tells us that there was a big fight between buyers and sellers during this period of time, but neither of them won. It's a sign of indecision in the market. Dojis are powerful when they appear in the market at a key support or resistance area or after a long trend. They can signal a potential reversal or a pause before a continuation. Context is everything. Okay, theory is great, but let's see this in action on a real chart. We're looking at SPX 500 on the 1 hour time frame. See this area here? Notice how price touched this level 1, 2, 3 times and bounced. This is a support level. We can draw a line or a zone to market. I like to draw mine at the median wick, so wherever price is touching the most wicks or candlesticks, I like to draw it. And then you can also see that after that support area was touched, we also had another touch right here and then also right here. Remember, we talked about support zones or levels can be touched multiple times before fully rejecting or bouncing off. Now look what happened here. After consolidating, we got this strong bullish candle that closed above resistance. That's a breakout. Oftentimes, price will come back and retest resistance before taking off. There goes your wick. That's your retest. It may not have touched exactly that line where you drew support, but it did come down a little bit. That's a retest. And here's a great example of a doji. Price was trending down, hit our support, formed this doji, showing indecision, and then what happened? The price reversal. This doesn't always mean a reversal, but it's a strong clue to pay attention to. Let's look at an example where resistance was broken. We had resistance formed right here. Then we had this bullish candle right here that closed above support. And then we got our wick, which came down to retest before a continuation up. Beautiful. Right here, we have resistance that was formed. And then same thing, what happened? Then we had this bearish candle, break through resistance, strong bearish close. Here goes your wick retest. It may not have touched everything, but it did pull back a little bit. Retest, entry would have been here, continuation down. Good trade. So let's quickly recap. Candlesticks tell a story. Bullish or green means price close up. Bearish or red means price close down. The body shows the open and close range, and wicks show the high and the low. Support is a price floor. Resistance is a price ceiling. Look for multiple touches. A doji signals indecision and can indicate a potential reversal, especially at key support and resistance levels. Breakouts with strong candle closes are important signals. The best way to get good at this is to practice. Open up your charts, start identifying these patterns, see how price reacts. Don't just take my word for it, back test it. I hope this breakdown helped you understand candlesticks and price action better. If it did, definitely give me a thumbs up and subscribe to the channel. And let me know down in the comments some ideas of other videos that you guys might want to see. The next one is definitely going to be about supply and demand, so look out for that one. And in the meantime, y'all stay blessed.